Good evening. I hope you all had a great day. Today, the market started up more than 800 points after it was reported that retail sales showed the biggest one-month increase of all time, being up 17.7% in May compared to the previous month. Note that this is misleading as retail sales continue to largely remain under previous levels. Regardless, the S&P ended the day posting a solid gain of 1.9%, while the Dow posted an even better gain of 2.04%. Finally, the NASDAQ ended the day up 1.75%. Boosting optimism after the surge in retail sales, it was also reported that homebuilder sentiment also posted its biggest monthly surge ever. Builder sentiment rose 21 points to a total of 58. Any score above 50 indicates a positive market. Previously in April, the Builder Sentiment Index was at 30, after it dropped a record-setting 42 points. Just like the retail sales, although there was a big jump on a monthly basis, there was still a lot of ground to make up from previous levels. The International Monetary Fund, which tries to ensure international economic stability, came out today saying, quote, "For the first time since the Great Depression, both advanced and emerging market economies will be in a recession in 2020. The forthcoming June World Economic Outlook update is likely to show negative growth rates, even worse than previously estimated," according to Jita Gopinath, the IMF's chief economist. The fund also said the current crisis is, quote, "unlike anything the world has seen before." Regardless, they stated, quote, "It is possible that with pent-up consumer demand, there will be a quicker rebound, unlike after previous crises. But still caution that this isn't a given because the health crisis might alter consumer spending, with people potentially saving more." Their current forecast for the global economy in April is a contraction of 3%. Today, Jerome Powell, the head of the Fed, had his first of 2 days testifying before Congress. Today, he warned about, quote, "significant uncertainty regarding the pace of the U.S. economic recovery," and said small businesses and lower income and minority Americans are particularly at risk. Quote, "The levels of output and employment remain far below their pre-pandemic levels, and significant uncertainty remains about the timing and strength of the recovery. Much of that economic uncertainty comes from uncertainty about the path of the disease and the effects of measures to contain it. Until the public is confident that the disease is contained, a full recovery is unlikely," according to Powell. While noting the strong policy response, Powell said several areas are raising concerns. He said, quote, "The pandemic is presenting acute risks to small businesses. If a small or medium-sized business becomes insolvent because the economy recovers too slowly, we lose more than just that business. These businesses are the heart of our economy and often embody the work of generations. Low-income households have experienced by far the sharpest drop in employment, while job losses of African Americans, Hispanics, and women have been greater than that of other groups. If not contained and reversed, the downturn could further widen gaps in economic well-being that the long expansion had made some progress in closing." Powell also made remarks about the Fed's corporate bond buying plans, which were announced yesterday by the Fed. Powell said that the central bank's announced move this week to buy corporate bonds fulfills a pledge that it had made earlier, but is not an effort to take over the market. According to Powell, quote, "It's out of an excess of caution to preserve these gains for the market function by following through. I don't see us wanting to run through the bond market like an elephant, snuffing out price signals, things like that. It's really going to depend on the level of the market function. If the market function continues to improve, then we're happy to slow down or even to stop the purchases. If it goes the other way, we will increase." Coronavirus cases continue to increase, as yesterday the state of Arizona reached an unfortunate milestone, as it had its first gain of more than 2,000 cases in one day. Meanwhile, Texas has seen a 66% increase in coronavirus-related hospitalizations since Memorial Day. The great day was seemingly felt by everyone. However, no one felt it more than oil and gas, which had a gain of nearly 3%. I was unable to find the reason for the jump in oil and gas, But yesterday, it was reported that the U.S. alone has already lost more than 100,000 oil and gas jobs. Telecommunications and utilities both posted the worst days, but were still largely in the green. Our U.S. barometer shows that small cap stocks performed the best today, with small cap core stocks being up 2.67% on average. Growth performed the worst. Regardless, every basket of stocks were up more than 1.6%. The biggest gain in the S&P 500 came from Eli Lilly & Co., which is an American pharmaceutical company. Today, they gained more than 15.7% after it was announced that their breast cancer drug, Verzenio, met a key goal in a late-stage trial. Eli said in a statement that its Phase 3 study demonstrated positive results in 5,637 people whose early breast cancer is at a high risk of recurrence. On top of this, the FDA approved Eli's Lumjev, which is a rapid-acting insulin used to improve glycemic control in type 1 and type 2 diabetics. After this news, Guggenheim upgraded Eli Lilly to buy from neutral. The second best day comes from popular clothing retailer Nordstrom, which gained 12.91% during trading today. Nordstrom and other retail stocks such as Gap and Kohl's posted nice days after the news about retail sales surging 17.7% on a month-over-month basis. The biggest loser in today's trading session comes from the Fox Corporation, which had its Class B shares being down 2.91%. This move downwards affected most broadcasting companies, as it came on news that major U.S. sports leagues may not be returning as soon as was previously anticipated, with their focus being more on the racial injustice issues and risks of the coronavirus. The other biggest loser was T-Mobile, which was down 1.71%. This sell-off came on news that popular investment and venture capital company SoftBank is looking to sell up to 2/3 of its stake in T-Mobile early next week. This sale would be approximately $20 billion and amount to around 15% of T-Mobile's market cap. Getting into earnings, we start off with Groupon, ticker symbol GRPN, which is a global e-commerce marketplace connecting subscribers with local merchants by offering deals and coupons. Groupon had a double beat as it surpassed EPS estimates by 28 cents after it came in with a quarterly loss of $1.63 per share. Revenue beat estimates by $22.45 million as it came in with quarterly revenue of $374.15 million. This represented a decline in revenue of 35.3% on a year-over-year basis. Surprisingly, investors were encouraged by this news, as quarterly earnings were not as bad as expected. Setting shares up nearly an additional 3% after already setting shares up more than 12% during regular trading hours. Next up, we have Oracle, ticker symbol ORCL, which is a large computer technology company. Today, they announced that they beat on EPS expectations, but missed on revenue. Non-GAAP EPS came in at $1.20 per share, which beat estimates by 5 cents. Revenue came in at $10.44 billion for the quarter, which missed estimates by $240 million and represented a decline in revenue of 6.3% on a year-over-year basis. Oracle did say that its fiscal Q4 EPS beat and revenue miss would have looked stronger if the pandemic hadn't postponed the purchases from clients in the hardest hit sectors, including hospitality, retail, and transportation. Regardless, investors did not like the news of this, as they sent shares down 4% after hours at the time of this recording. Lastly, we have H&R Block, ticker symbol HRB, which is an American tax preparation company. H&R Block had good earnings today, beating on both EPS and revenue estimates. Non-GAAP EPS came in at a gain of $3.01 per share, beating estimates by 40 cents. Revenue beat estimates by a slight $50 million after they posted quarterly revenue of $1.81 billion, which represented a decline in revenue of 22.3% on a year-over-year basis. Investors took this news greatly, setting shares up nearly 5% at the time of this recording. That is all I have for you tonight. I hope you all have a great rest of your day. As always, I will see you again tomorrow.